Welcome to the deep dive.
Great to be here.
Ever wondered what country bankruptcy actually means? It sounds, pretty dramatic.
Yeah, like a whole nation just packs up and closes shop.
Right. But the reality is much more nuanced and, frankly, much more painful.
It's definitely not like a company filing for Chapter 11, no.
How so?
Well, when a state defaults, it's a different kind of crisis altogether. It impacts, everything from global finance right down to the daily lives of its citizens.
Exactly. And we're diving deep into that today.
Okay.
We're guided by insights from a specific source. It's a transcript from the YouTube channel Natural Investor.
Ah, okay.
Yeah, this material tackles questions about the millionaire mindset, apparently, but it takes this fascinating turn to explore what happens when national finances really unravel.
Interesting pivot. So our mission in this deep dive
Is to take the journey outlined in this source material.
right, it lays out a kind of spectrum, doesn't it? National financial distress.
Yes, starting from high debt, moving through warning signs, the pretty devastating consequences of actual default.
All the way to what it calls a failed state.
Exactly. So we'll unpack the signs, the causes, the brutal realities, all based on what this source presents.
Let's do it.
Okay, so let's unpack this first bit. What does this source mean when it talks about a country going bankrupt or defaulting?
It defines it quite simply, actually. It's just a state failing to pay its debts.
So payments on its bonds, its loans, that kind of thing.
Precisely. But the material emphasizes, and this is important, it's not like an on-off switch. It's more of a spectrum. Different phases of financial health or, distress.
Okay, so the source starts by looking at what it calls the normal phase.
Yeah, focusing on a country's debt measured as a percentage of its GDP, gross domestic product.
Right, the debt to GDP ratio.
Exactly. And historically, it notes, developed countries might have had ratios around, say, 40-60%, developing ones maybe closer to 60%.
But that's changed.
Oh, yeah. What's striking, according to this source, is how much those numbers have climbed. Many developed nations today, their debt levels are soaring past 100% of GDP.
Wow, 100%.
Easily. The source gives some pretty eye-opening current examples.
Like?
Japan leads the pack. It says around 259%.
259?
Yep. Then Sudan at 200%, Greece 194%, Italy 180%, even Singapore at 160%. High numbers.
And it mentions Thailand, too.
It contrasts these with Thailand, yeah. Citing its current debt around 60-70%.
Which the source considers.
Not high, it says. Though it does add this little caveat like potential back office numbers aren't publicly known,
Okay. But here's a core insight the source pulls out, right? High debt alone doesn't automatically equal collapse.
Absolutely crucial point. The key, it argues, is a country's capacity to pay.
So, Japan, despite that enormous debt.
It's presented as a normal country because it can still manage those payments. It has the economic strength, the systems.
Okay, that makes sense.
And this raises a critical point because the source contrasts Japan's situation with Venezuela.
Which defaulted.
Right. It defaulted despite having a significantly lower debt ratio, around 130%.
So it's not just the number.
No. It highlights that capacity, which is often tied to a healthy economy, functional institutions, that seems more crucial than just the raw debt figure itself.
Okay. So if a high debt percentage isn't the only trigger, what are the red flags? What pushes a country from normal towards that dangerous edge, towards distress or default?
Well, this source really seems to zero in on societal issues.
Like what?
Two factors are heavily emphasized all through the material as common precursors to national financial collapse.
Which are?
High inequality and widespread corruption.
Okay, let's take inequality first. How does the source connect that?
It draws a strong connection between really high levels of inequality and social unrest.
Which can destabilize things.
Totally. Destabilize the government, tank an economy. It uses the powerful recent example of Sri Lanka.
Ah, yes. I remember the images.
That whole scenario, right? The public storming the presidential palace.
Finding hidden cash and gold.
Yeah. And the president fleeing. That's presented by the source as a really stark outcome of wealth being just so heavily concentrated at the very top, the 1%.
So when that gap gets too wide.
It creates this explosive social pressure. It's just unsustainable, according to the source.
Okay, and the second factor, corruption.
Yeah, corruption. The source identifies high corruption rates as incredibly common in countries that end up defaulting.
Does it give examples?
It gives a very specific kind of illustrative one.
Yeah.
Infrastructure projects, where the company names listed are identical to the names of the government officials involved.
Wow, okay. That's pretty blatant.
It's a pretty transparent indicator of potential graft, yeah. The source also makes a very specific sort of domestically focused observation about Thailand.
What's that?
Describing corruption there as deeply ingrained, maybe in our bloodstream, is the phrase used, something it notes is widely known within the country.
Right. And it's important, as always, we're just presenting the points made in this specific source material here. We're staying impartial on the claims themselves.
Absolutely. The source does contrast this situation with countries it sees as having very low, maybe negligible corruption.
Like Finland, Norway.
Exactly. Finland, Norway, potentially New Zealand are cited as examples.
Interesting contrast.
And the material also briefly touches on lobbying in the U.S. within this context.
How so?
Just mentioning it's legal, but highly paid, sort of highlighting different ways influence can operate within political and economic systems.
Right. Different systems, different issues. Okay, so you have countries wrestling with debt, often compounded by these underlying issues, deep inequality, systemic corruption.
Yeah, dangerous mix.
So what does this source say actually happens when a country defaults or gets really close to that point? What are the real-world consequences?
The material describes consequences that fundamentally just disrupt daily life and economic activity, too.
They're not just numbers on a screen.
No, not at all. They're concrete problems, very visible.
Like what? Give me an example from the source.
Well, one visible sign, particularly in developing nations maybe, is halted infrastructure projects.
Yeah.
The source uses the examples of that unfinished Hopewell structure in Bangkok.
Oh, yeah, the Bangkok Stonehenge.
Right. Or abandoned buildings left over from the 1997 financial crisis. Ghost structures.
And why do they just stop?
The explanation the source gives is simple, but pretty impactful. Payments for these big projects, they're often tied to the percentage of work completed.
Okay.
So when the government runs out of money, or maybe disputes arise, the payments just stop. And the construction freezes, sometimes for decades.
Wow. Okay. What else?
Another massive consequence. Currency devaluation.
The value of the money just plummets.
Exactly. Confidence in the country's currency just evaporates. It leads to a rapid loss of value.
How bad can it get?
Well, the source paints a hypothetical picture for the Thai baht, suggesting it could plummet from, say, 33 baht to the US dollar maybe down to 100.
100. That's huge.
Or like the Laos example it mentions, with a rate set at around 4,090, something like that. A dramatic fall.
And that kind of collapse, what does it do?
It makes imports astronomically expensive or even impossible to purchase at any price.
And that inability to import essentials? That must have devastating domino effects.
Huge. The source returns to the Sri Lanka example again here to show this.
Because they couldn't afford imports.
Exactly. They couldn't afford to import oil because their currency was basically worthless on the international market.
And the result?
Empty gas stations. Ridiculously long queues for fuel, people's cars literally getting stuck because they ran out of gas waiting.
Oh, man.
The source also notes the difficulty importing other crucial resources, like coal needed for electricity generation.
Which leads directly to power cuts.
You got it. The fuel shortages the source describes in Sri Lanka resulted in rationing, brief electricity cuts. When you can't import fuel, well, your lights go out. Simple as that.
That affects everyone.
Absolutely. And all of this culminates in a skyrocketing cost of living.
So inflation goes wild.
Through the roof. But the source makes another crucial point here. Even if you were wealthy, even if you had money, life becomes incredibly difficult because the basic necessities, food, utilities, fuel, they become either prohibitively expensive or they just vanish from shelves and pumps altogether.
So money doesn't even help that much if the systems break down.
Exactly. The material emphasizes that even rich people struggle when the fundamental infrastructure and supply chains collapse.
Okay, so taking this to its most extreme point.
Yeah.
The source describes the ultimate breakdown, the failed state.
Yeah, this is effectively rock bottom. According to this material, the characteristics include just a complete lack of functioning government.
No police, no army.
No effective police force, no army. People are left essentially isolated, forced to fend for themselves. Live by yourself, as the source puts it.
And the consequences of that.
Dire.
Yeah.
Crime rates become incredibly high. The source suggests, pretty grimly, that if you had any money, you would likely be robbed immediately. There's no authority to protect you.
And the economy.
It can regress entirely. Maybe return to simple bartering.
Like trading goods directly.
Yeah, trading fish for rice, that kind of thing.
Yeah.
The source offers this powerful, really grim image. Currency becoming so utterly worthless
that
it could literally be used as pavement material. Just bricks of useless paper.
Good Grief. Does the source name countries it considers failed states?
It cites specific examples, yeah. Somalia, Libya, Sudan. It also mentions Afghanistan as potentially fitting this description.
And how did it reach these conclusions?
It notes that these conclusions are based on researching case studies and also referencing perspectives like a Thai vlogger who apparently visited a location considered a failed state.
Okay, so once a country is in such a terrible state, severe distress, or even failed, the source explores why it's so incredibly difficult to recover.
Right, and critically, why it's so hard to find effective, uncorrupt leadership.
Why is that? External help must be hard to get.
Exactly. The source uses an analogy that makes it pretty clear. Trying to attract external investment or significant help at this stage, it's like trying to convince someone to buy a bankrupt company.
Okay.
That also comes with its massive pile of existing debt. It's just not an appealing prospect for investors or other countries. Too risky.
Right, and finding good leaders from within.
That's presented as a near impossible challenge. The source uses another powerful hypothetical analogy here.
What's that?
Imagine running circles around a football field. In one scenario, you get paid money for each lap.
Okay.
In the other, you're doing it tirelessly because a loved one desperately needs it for survival.
Ah, I see. Motivation.
Exactly. This analogy highlights the profound difficulty in finding individuals willing to work incredibly hard just for the good of a struggling nation with very little personal financial gain.
While resisting temptation.
Exactly. While simultaneously resisting the overwhelming temptation of corruption, which has likely become totally endemic in the system by that point, it's portrayed as needing a truly extraordinary, almost saintly individual.
That sounds incredibly difficult.
Yeah. The source also notes something else. Leaders in countries heading toward distress or already in it often stay in power for really extended periods.
Like dictatorships or long-term regimes?
Kind of. It cites Venezuela's Hugo Chavez as an example, showing a chart apparently indicating his long tenure.
And the implication?
The implication drawn in the source is that this longevity just provides ample time, more opportunity for corruption to become deeply entrenched, harder to root out.
Okay. So we've followed the path laid out in the source material then. We've taken this deep dive.
Yeah, from navigating normal debt levels.
Through those critical warning signs, inequality, corruption.
Into the really devastating consequences of default, like currency collapse, essential shortages.
And ultimately to the complete collapse of state function in a failed state.
It's quite a bleak picture the source paints. It presents this as a kind of cycle, one that can feel overwhelming.
Oh, so?
Suggesting that for individuals caught up in it, the perspective can just be one of being small people watching. You know, perhaps feeling powerless to fundamentally alter the course of things.
Yeah. It certainly leaves you with a lot to consider. If, as the source suggests, through examples like Sri Lanka, severe economic hardship combined with that perceived elite corruption, if that can ignite social unrest that targets leaders and institutions.
Yeah.
Well, what does this cyclical relationship tell us about the fundamental link between a country's financial health, the trust its citizens place in its leadership, and just the overall stability and well-being of the nation?
That's a big question.
And maybe, given these dynamics, what power, if any, can individuals truly exert within such a system to push for change or demand accountability?
Definitely something to mull over.